Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 21st of May. I'm Daniel Lam, your host for the podcast. Hong Kong China equities continue to grab markets' attention. We pointed out earlier that due to the low expectations in China and high expectations in the US data, that the Chinese economic surprise indicator has been leading the US over the last few months, mapping very well with the equities outperformance of China over the US in that time. Now it appears that the news flow is also coming in as a tailwind for Chinese assets. The China's Ministry of Finance started the issuance of ultra long-term special central government bonds, SCGB, with a plan to issue 1 trillion RMB over the next 7 months. So this came after the Politburo committed to front-load the sale of SCGBs at its April meeting. Now the timing of the debt is likely intended to offset the impact of credit contraction resulting from a slump in the first quarter bond issuance. The proceeds from the SCGBs are likely to be used to fund infrastructure investments that would be supportive for growth. Now, there are concerns that the influx in bond supply could strain liquidity, but we believe that is manageable given the long issuance timeline, ready state bank buyers, and PBOC's assistance. Separately, reports suggested authorities are considering a proposal for local governments to buy excess home inventories. Now, we believe the execution is not going to be so easy or quick, given the fact that new home oversupply is significant at the current pace of sales. Home supply continues to rise, and there has been unconvincing results from similar schemes historically. Of course, to solve the structural issues in China is not going to be an easy task. But with such liquidity rotating into Hong Kong China risky assets, the positive signaling effect from such news is going to help support risk sentiment further. So we continue to see strong tactical opportunities in the Hong Kong China markets. For example, in equities that have been beaten down and are still cheap in valuation, i.e. the higher beta stocks related to the internet and technology hardware sectors. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.